Hey, Big Frank. Frank, what part of the world are you from? Don't mean to be so frank. Konnichiwa, YJ! Yeah, I got your message, YJ. Yeah, I didn't have time to follow up in great detail, but welcome home, huh? You sure keep yourself busy. Nigerian, very cool. All right. So sorry, I got to jump in and do business. I want to hang with you guys. By the way, I was up at 2 in the morning and 4 in the morning, and what day is it? Where are we? What's going on? Anyways, let me remind you that trading Forex is risky, especially if you're on Forex.T. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Nigeria is going to do well in the World Cup this year. Yeah. Forget about GDP and wealth, fair wealth distribution, social justice, and all that, but soccer team, boom. So anyways, hey, you got to do something, right? So anyways, Nigeria has beautiful oil. That's what I can tell you. Other than that, I don't know much about Nigeria. All right, so I kind of feel bad. I got out of my pound yen short trade. I know you don't see it. Not long ago, like an hour ago, just because it sat for 24 hours without doing anything. So I got out. Of course, now it's like, shoot. Anyways, hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. It's a pleasure to be here with you every morning, and in fact, it's my honor to work with you. It's a privilege and an honor to work with you every single morning. We do these sessions at 7:30 a.m. New York time. It's approximately London lunch, a couple hours before the stock market opens. Good time to meet as a community and align our satellites. I ask you to get involved. I encourage you to ask questions. I am here for you. I am your humble servant and simple currency analyst that can share some experience. The overriding goal of these webinars is to make you a success now. But here's the problem. It still will take blood, sweat, and tears for years. So I hope you understand that the message I provide is that this is something that you can conquer, but it may be one of the most difficult things you ever do. But the payoff is more than fair. Because maybe I've seen that 95% of retail traders fail, but the other 5% get to keep 100% of the money. So it's kind of worth the fight. I'm watching this pound yen fall. Oh my God. Anyways, so thank you for being a client to TradersWay. If you have not opened an account yet, please visit TradersWay.com and let us earn your loyalty and respect. All right. Here's what I'm babbling on about behind the scenes. Let me get my drawing tool. I shorted this here. And 24 hours later, it hadn't done anything. So I'm like, I think it'll get out at break even. So I got out at break even. Hey, Emilio. Hey, are you going to be around in an hour, Emilio? You've been busy lately. So anyways, I missed out on that. Boo, shoot. And then, how about this? You ready for this one? I even had a conversation with my wife and kids about my euro-yen short position. It's not euro-yen, sorry, euro-Turkish lira. And I exited, I think, recently anyways. And what the holy whoa. What? And I'm not in it. What are you talking about? Holy whoa. Hey, but nice M3 to target, right? Look where it stopped though. Isn't that great? Exactly week daily pivot point. Exactly a daily pivot point. So I would interpret this as that whoever's trading Euro Turkish lira very clearly knows pivot point theory. But shoot, not in this one. Son of a gun. I think I exited. I don't know. I can't remember, but I'm bummed about it. Boo hoo. Crazy though, right? So Turkey raised interest rates about 45 minutes ago. Oh, is that USD? Oh, sorry. I must have clicked the other one. So anyways, that's USD Turkish lira. Oh, here it is. Sorry. Thank you. Apologize for that. That's why I couldn't find my line. So somewhere in this consolidation, I got knocked out. But crazy, right? I know, right? Makes my overall macro plan look just fine though, right? Right? Overall, my macro plan, as you can see, not bad. Okay. So hopefully there's this follow-up. Maybe this is a sign that Turkey is going to actually do their job, because one of the reasons it weakened so much is it looked like Erdogan wasn't going to do anything. And they're like, wow, really? Nothing? Yeah. No, Hassan. I'm going to attack it like a piranha with blood in the water. Okay. You looked hard at it, carry over. Yeah. Yeah, you got to be careful with the spread. You got to pay attention to what you're doing. Faux show. Look at the spread on this 15-minute chart, right? Because I have both going here, right? Show ask line. So you can see the bid-ask spread right there. Hang on, let me draw it. You see the two lines moving? That's the spread. That doesn't look like it's too much, right? Michael says it could only go up now. Well, I don't like to trade that way. John says, yeah, it's much wider rollover. Yeah, because everyone's monkeying with it, right? So yeah, just trade it properly, jam a stop, and try to trade it that way. Okay. You'll also know that, or notice that the spread will widen when there's low liquidity. So you can see liquidity would have been high here, and the spread is tiny, right? Negligible, right? So whatever, it's still there, right? It just whatever. So it's part of the plan. It's just what we do as currency traders. Yeah. Well, so John, one of the things obviously that I recommend in pairs like this is to sell and hold. One of the best strategies is to move your stop to break even. Let's say you only carry trade on one MT4 platform, okay? And you take the trade, move the stop to break even, shut the platform down, maybe not open it for a week or two or three. Yeah. The best thing is to set it and forget it as much as possible. That seems to work well. The whole set it and forget it. So, anyways, let's move on. Wait, what's going on here? Well, that's still trying, huh? Very interesting. All right. All right. Let's go to the normal setup. Yeah, John. So what you want to do is take the shot, move your stop, take a shot, move a stop, take a shot, move a stop. You know, it's not a good pair to scalp, right? And day trading, you don't get the rollover. So you kind of have to have that idea that they're all Hail Marys. It's like the home run derby, right? It doesn't matter unless you hit it out of the ballpark. So swing. It's just not a good pair for bunting. All right. Okay, a little bit of consolidation. For some reason, I drew a gray line here before we got down to consolidation. That's weird, right? So we're down at a cluster of support. I believe it's a 618, and it's this top brought across. Okay. So you have to decide, is this monthly pivot support in your eyes? It's in your definition of support. Well, it's quite a coincidence that it double bottomed exactly on that monthly pivot, right? An amazing coincidence. Okay. So what WWWD, what would Wayne do? By the way, I drew this orange line, right? That's my orange line. I can't even remember now, but it's still in play. One thing you can try to do now is look for a scenario like this, which is a higher high, and then you would set up a higher low scenario. Okay, and your entry at that point would be somewhere around here. Okay, doesn't mean you have to be long now. The first part is playing the double bottom, which you've already missed, so I don't see the point of doing anything here, do you? So the difference between this X and that O, pip-wise, is basically nothing. So why not just go long now? Oh, good job, Brooke. Brooke. Yeah, the difference is, Jim is right, the difference is risk. It's the same price, same trade. What do you, right? Why not just long it here at this price instead of there? So what lowers your risk is waiting for the higher high and then waiting for the higher low and taking the shot at support after the higher high. So you got the double bottom, which is a reversal pattern, then a higher high, which is part of a reversal. So the higher low completes the reversal. So you're in a post trough. Ex post. Cool, right? Now YJ's back. We haven't seen YJ in a couple of years. YJ once traded this pattern 100 times in a row. And I said, at the very, very least, you're going to develop patience and discipline, right? At the very least. And I said to YJ, I'm like, hey, are those characteristics that you think a successful trader will have? Do you think a successful trader would have patience and discipline? And he's like, yeah. And I said, so I don't know if you'll be a better trader, but you'll have patience and discipline, which may actually be a requirement. So at the very least, you're on your way. You're going to be able to check a couple of things off the list, right? And maybe this will be a pattern that will work for you. So you'll be patient, you'll be disciplined, you'll be experienced, and you'll be very confident in at least one setup. Michael says, how long does it take to pull the trigger here? So this is when I'm in that zone, and just to be clear, it doesn't have to be exactly that circle. It could be a 382, it could be a 50%, it could be a 618. If there's a psychological level in there, which that's up here, that's a little high. Where's 50? 50's in here. Okay, so that's about a 382. It could be one of those. It could be this old area. You see how it was important in these prices, it was important in these prices, it was important in that price, so it could be that price. It could be whatever. It's never the same, and it's always different. Okay? So when as it's falling now, look at all these things. Where's the pivot? Where's the psych? Where's the price action? All that kind of stuff. Where's the fib? Where's the time of day? And then I drop into either a 15-minute chart or 5-minute chart, and then I start looking for moving average crossovers or oscillator crossovers or candlestick patterns, whatever. That's all decision making. But at least I know the price I want to look to go long. And then I just have to find a technical confirmation to go long. And that could be anything I want on any time frame because it doesn't matter. Right? If this is going to go up, does it really matter how you pull the trigger? If you bought it at support after double bottom high scenario, if you're wrong, it's going to come down and knock you out. And if you're right, it's going to go up. All you're doing is buying a decent price. Okay? The strategy is the strategy. Okay? Your tactics could be much different than mine, but if you're buying a dip after a reversal pattern and you use an oscillator and I use a moving average and someone else just use a limit order and someone else just buy it blindly at support and someone else does something else, doesn't even matter. The strategy matters, right? Could you trade it as a head and shoulders? Well, you know what? It's all the same thing. So you can call it a head and shoulders. That's fine. You know, like this. You know, you're going to call this a neckline, and that, you know, that kind of thing, and this a neckline up into there. Sure, because the thing is, a head and shoulders, which is this, a crown, which is this, a double top, which is that, you know, and a 1, 2, 3 is that. You notice they're basically all the same to me. Buy here, or sorry, sell there, sell there, sell there. It's all the same thing to me. It's all the same thing. It's just somebody that makes money selling books has named 27 different reversal patterns, different names, but they're all the same reversal pattern. I don't care what you call it. You want to trade it as inverse head and shoulders? By all means. But if that means you're buying dips after reversals, yeah. The other most important thing is this has to happen at support. If you cannot clearly identify that as support, then ignore it. Okay? If you saw an inverse head and shoulders and you can't understand why it reversed there, you cannot give me a hardcore technical reason for why it's reversing there, then forget about it. It's fool's gold. Okay? So if I asked you, is there a logical, intelligent reason for it to reverse here? You could say, well, it's weekly support and it's monthly support. Is that believable? Could I give a reasonable argument and maybe get people to agree with me that this is not a random walk, this is not market noise, that this cluster between monthly support and weekly support is important to the market? Could I argue that, and would a reasonable, intelligent person agree? Okay, now I can look for it. Okay, now I can look at the pattern. I can trade the double bottom, or I can wait for the 1, 2, 3. Now, Brooke's already in it, and I'll show you why probably. You zoom in, okay, double bottom. Oops, clear this out. Okay, double bottom. We knew this was coming ahead of time. We know this is a pivot cluster of logical support. You knew that before. You knew that when we were up here. Okay? And then there's something going on in here, right? So, and this could have been a buy, this could have been a buy, but most importantly, this could have been a buy. Right? This is a breakout retracement type strategy. Now it's going to kind of do the same. And now buying it is pretty late because you have to assume that this is going to be respected. Okay? It's just like you have to be a bull before it's bullish. Okay? Wayne, how do you know to buy it? You never do. Never. Okay? The only difference, guys, is if you're a bull, you're cautiously buying this. You're nervous. Right? If it's trending up, you're still a bull, but now you're confident. But you're a bull or you're not a bull. It's people that are trying to like, should I be a bull today and a bear tomorrow? And what about this week? And what about next week? You're always going to be late. And when you're not late, you're going to be early because you're guessing. And on the long run, you're just not going to do well because your trading will be very inconsistent. You clearly don't have a bias. I mean, like oil is a great example too. Like, it's a commodity. It's the perfect thing to have a bias on because it's a real tangible thing. Money's not even real. Right? I can create money from nothing. And this is how the banking system works. Let's say I lend you $5,000. I give you $5,000, but it's a loan. What do you give me? Okay, so $5,500 is you're going to pay me back. So you give me an IOU. This is an asset. It means you owe me $5,500. You have $5,000 in cash. Where did the 500 come from? I just made it out of nothing. Now here's the cool thing. What does a bank do now? I have a piece of paper that says you owe me $5,500. I can now take it and sell it to someone for $5,100 and say, well, give me my $5,100. Now I got my $5,000 back, plus I made 100, and now this other person has an IOU that you owe them, so now they have an upside potential of 400. And then now that person could then go out and buy insurance. What if you don't pay? You know, and all these financial derivatives start getting made, right? But oil is oil. There it is. It's in the barrel. You can find your barrel. It's like when you eat a steak, there was a cow eating grass, right? It was a living, breathing animal. It was tangible and real. It dreamed. Actually, that reminds me. I was at a science fair with my children when they were like 7 years old. I was taking them to science fairs. Hey, they're state champions in science now. But anyways, so they're like 7 or 8, or well, they're younger than 10. So they're 7 or 8. And we go to this one booth, and by the way, this is run by Georgia Tech, and it was a real college science fair. We get to this one tent, and they have brains, jars of brains. Right? And, these are people studying these real brains, real scientists, potential PhD students and stuff. And there's tens of thousands of people at the science fair. And they're getting questions nonstop. And I said to my daughter, I'm like, I'm going to ask this person the question. They're not going to know the answer. Right? So we go up and we elbow our way through, and they're like, would you like to touch the brain? I'm like, come on, wait, touch the brain. And so anyways, and then I said, well, what kind of brain is it? And she says, it's a sheep's brain. And I said, do sheep dream? She's like, I don't know. And, high five with the kids. Yeah, boom. Nice. So anyways, sheep are tangible. Oil is tangible. So you should be able to figure out for this tangible good if there's people are going to buy it or not. What kind of demand is there to buy this commodity, right? So I think that's a perfect one that you should really have a bias. Are people going to buy oil, yes or no? And they're like, well, it comes down to supply and demand. Well, that should be fairly easy. How much oil is there and how much demand is there? Like, you could go out and actually get the numbers, right? There are entire agencies that have quants and PhDs, hundreds of them, thousands of them, crunching out numbers and issuing reports for free. You just read the report. So, so you can just simply be a bull bear, which I've always been asking you to do. Make a decision and then trade that, because then you're never early or late. If you're a bull, this was really bad, that didn't go your way, and maybe you bought some of this consolidation. Remember I had like 1,000 reasons why that would act as support, and it did for quite a while, and then collapsed, right? So maybe you made money in here, maybe you broke even in here, and then you try again. What about this support line? Okay, it held here, came up. Remember, we had this as a short. You guys remember that? If you were a bear, this was a really easy trade, if you remember. Okay, so bears had it this way. But if you're a bull, you're like, oh, I wonder if it'll double bottom there. Oh, look, it double bottom, right? And at some point, if it does this, you're going to have to say, oh, look, go 1, 2, 3. But bulls are going to see that way sooner than a bear. A bear's not looking for that. A bear thinks that that's ridiculous. Remember, my bearish target is 63, not 64. Right? Right? So now bears are setting things up. You think a bear's going to sell this at 65.50? What do you think? You think a bear would sell it here? You think a bear would sell it here? You think a bear would sell it here? Well, those are points that bears are probably looking to sell, which means if you longed it here, that was great, right? Good job, right? No one's going to sell it there, right? What kind of idiot would sell it here? Okay, so you know no one's going to sell it there. Is it likely that someone's going to sell it here at 65.50? Yeah, there's a pretty good chance, probably. So if you're a bull here, that might be a chance to move your stop. But do you understand, like, that's why I say buying it now is just way too late. It'd be foolish to buy it there now. If you were so aggressive, you would have bought it down here or down here. But here is like terrible. What a terrible place to buy it. Because it's a reasonably okay place to sell it. What about here? Yeah, maybe. There's stuff going on here. So someone could sell it at 66, sure. But this is even better, right? 66.5 is even better. So how can we kind of put this together, right? It could do more like this, but it also could do this, right? Or this could fail and do this. These are all the other side of your trade, and you should look for signs of this happening. By the way, I am so hungry. I'm going to have to eat while we work. I apologize. For some reason in America, you'll buy a granola bar like this. On the package, you'll see a granola bar like that. But then when you open it up, they put candy. In America, they put candy on everything. You go to New York and have a cheesecake. It's beautiful, soft and fluffy and thick and rich. And then you buy one at a grocery store in America, and it's the sweetest, nastiest, jello-y-ish thing ever. And I'm like, that's not a cheesecake. I wouldn't feed that to my dog. I don't know. Everything here is sweet. It's the sweetest country in the world. By the way, it's to blame for the obesity in America. Back in the 50s, the sugar industry was afraid of losing their subsidies, which it's still heavily, heavily subsidized. For nobody knows why. But anyways, they were worried about losing the government subsidies. So they hired a Harvard professor to do a study, and the study said that sugar wasn't the problem in America. Fat food was the problem, not sugar. So by the time the 70s came along, the government fully adopted this. And during the 80s and 90s, everyone started eating fat-free food. Everything was fat-free. Fat-free! Also, we converted, instead of using traditional sources of sugar, which is expensive, we started using corn to make sugar. So you get high fructose corn syrup. Not only is that sweet and sugary, but your body doesn't digest it. So anyways, America went on a fat-free 20-year binge of fat-free food, and we got fat, like fat. It's amazing. People wobble. People wobble here. It's amazing. It's like a real problem. It's a real problem. It's amazing. But anyways, so I can't even buy a granola bar without sugar. They don't even sell them. The picture on the box doesn't even show this because I buy it because I want one without this chocolate. Why do I need chocolate on a granola bar? So anyways, I just think it's funny. There's a restaurant here called the Texas Roadhouse. You can imagine what it's like. And everyone pulls up in their trucks. Men and women get out and they wobble, and their backs hurt and their knees hurt and their hips hurt. You can see, and they wobble like this. We're going to the Texas Roadhouse. And it's amazing though, like you can sit there and it's an epidemic. It's an absolute epidemic. I'm not joking. 60% of the people have knee problems and hip problems because they're so big. It's amazing. And I'm fat, man. I'm so fat right now. It's disgusting. Oh, I feel terrible. Anyways, let's move on. Sugar on granola bars. Why? Write about it. Okay, so my pig, I missed my pig. Let's look in here. Okay. This one was and pound's been tricky lately. So this is a out of position swing. So you drop to the 4-hour, which we're on. You're supposed to buy a retracement to the top, which didn't really work that well, but it did go up, and this is the target for the week. It's Thursday, so I would not look to counter trend this, generally speaking, but this looks interesting, doesn't it? And once again, an amazing coincidence, this reversed at the WR2, right? The other interesting thing is this whole area up here on the last week of May. I think it was May 30th. I did a video for the swing trading group. We had this as a sell zone for pound dollar. So I don't know if it's going to work, but if that's something you believe in, give me something to believe in, then you're going to look for opportunities, right? And that maybe that's it. Well, it depends. Are you a weekly or are you a monthly, Hassan? I don't know your trade plan. But if you're doing the monthly trade plan, then that is very easy. See, when you know how to swing trade, these are very definite, precise numbers. It's 129.70. Doesn't mean we get there. It's just a monthly swing. Okay. So you could sell that if you wanted to. There are bulls in this market, though. Let me tell you something. So are you practicing proper like chart management? I guess you want to talk about it. Like, are you identifying tops and bottoms and marking these up? I love doing this over and 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 over. Okay. Okay. You should be marking your charts. Because what if it starts coming down? Do you think these price levels will be important? Yeah, absolutely. It'll do like this. So it's just proper habits, right? Let's take a look at this. I know, right? You're welcome. Okay. What do you think? Let's do this. See, I think the moving averages are more helpful than the daily pivots. Right. So this is like my old school stuff. Anyone that's read my book or hung out with me over the last 15 years, you know that 2155 crosses when it's technically bullish, right? When you buy 5A crosses, take profit, buy a 5A cross, take profit, buy a 5A cross. Looks like you had to take profit or try again, which is unfortunate. Here's another one. The consolidation takes you out. Okay. And typically you stop trading here as well. Should, you know, you're basically done for the day up in there. Done for the day up in here. Okay. That's just old school. Now that's an 8 SMA. Yeah. That's just, but that's like, that's so old school. I don't know. It's just assumed, right? It's just assumed. Yeah. Michael says, so price is losing power. Well, these are just pivot profit zones. So bulls are taking profit. That's all it is. Doesn't mean it's going to reverse. It just means they're taking profit. And very often in scenarios like that, they buy the dip. So again, the old school message out of the book is that when you're above the 21, you're bullish and aggressive, which means you buy all retracements back to the 21. And you know that there's 100% chance, absolute total 100% chance that we're going to make a higher high. So you put yourself in scenarios of buying things like this. And you know absolutely for sure it's going to make a higher high until it doesn't. Okay? But that's what these lines are for, guys. Up, 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 down, down, buy. 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 Up, 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 down, down, buy. Okay? That's just classic. I've been teaching that for close to 15 years. So that's the basics, right? And then from there, you can fold in these other things like, you know, up in here, you're just done for the day. You could have just left all of New York, just walked away. Same thing. Rallies up into London open, right? You're done. You just leave New York, you're done. Done. Here's one, right? Again, sort of New York open. You hit your target, done. Next. But what most people tend to do, because they lack the discipline and they lack the bias, you lack the bias. What they end up doing inevitably, probably because of those same issues, they're probably not in this move at all because they didn't have a plan, right? And then they start heavily trading in here, right? They miss all of this, then they start heavily trading in here. Right? Same thing here, or they're heavily trading here, or then they're selling forever, and then and then they're buying forever, then no, right? And what often happens is these turning points is where everyone late starts to party, right? And I think this is people losing money. See, you might look at it like when I say if you're profitable and you hit this, you should just take your profit, walk away. You may feel like, well, Wayne, you're leaving a lot of money on the table and all this kind of stuff. But the most interesting thing here, once you've been around for a long time, you'll realize that this is where the majority of losses occur. People buying and selling this mediocrity, they're commoditizing mediocrity. And that's where they lose most of their money. And because they lack the plan and the discipline and all that, they miss all of this. So they don't start buying until after it's happened. And by the time it happened, they're basically buying near or in this zone. And that's where the vast majority of the losses are. Where what I'm trying to teach you is think about it ahead of time, buy, get in here, and walk away and just miss all of that. Just like, don't worry about it. What do I tell you? Volunteer at a museum as a docent, or go to an old folks home and just sit down and talk with the old people. Let everyone else do this pain. Okay? And it's usually the same whether it's a daily pivot like what we're looking at, weekly, monthly. It's a message that I've been sharing, again, forever. Forever. That eventually you'll end up trading less and making more. Oh, your question, Barry? Sorry. The chat goes by Barry. You want Kiwi yen? Is what you're asking for? Sure. La, da, 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 da. Yeah, so has anything changed since yesterday? Okay, there you go. How was that? What more am I supposed to say, right? Is this a good place to buy it? What do you think? You should bet the farm? You think you should buy it there? So, but I'm being facetious, but that's a lot of information. What kind of person would buy it there? Yeah. So if you're not going to buy it there, because a noob's not going to move the market, right, Barry? So, right, if you're not going to buy it there, then you either not buy it or you sell it. So then you create a trade plan because the strategy is either not buy it, so that's pretty definite, or maybe sell it. Cool. So maybe sell it. Great. Do you have a logical, defendable resistance? Yeah. Monthly resistance. So let's drop into like 15. That's a monthly R1. That's a weekly M4. Yeah. Cool. Great. So now your strategy is defined. you have, it falls within your rules of engagement. So now you need to have a tactical entry. Okay. So you can ignore breakout to the upside, or you wait for a breakout on the downside. I'm going to do it this way, off the second one. Okay. So what we did yesterday, when I covered this for you, I said wait for a drop, retracement, set up the lower high. Wayne, is the profit zone typically weekly R2 or weekly S2? It's between M1 and S2 and M4 and R2, Sonny. And of course, monthly, weekly, daily, they're all valid. They're just valid to different time frames and different trading styles. Okay? So there you go, guys. It's the same as yesterday. Okay? I'm not telling you to do one thing or another, Hassan. You can do whatever you want. You can sell at the resistance, or you can wait for a breakout. If you've decided not to buy it, then you either sell it at resistance or you wait for the breakout and sell the pullback. Both are correct. Okay. Cool. Looks a little messy, don't you think? Whatever it takes. Do you guys remember the target? Again, I did this on May 30th. Last month, on May 30th, I made a video for the swing trading group. Okay. I'm trying to get rid of the stuff that doesn't matter anymore. And what do you think the video covered? May 30th. I'll give you a hint. We were insert shade lips. We were in here. Okay. Could you have possibly considered that on May 30th a double bottom? Lots of people saying yes. Okay, cool. So that's an opportunity for bulls to consider going long. Okay? Doesn't give them permission. Well, it gives them permission, but it's not enough for a trigger. But you could say, as a bear, huh, that looks like a double bottom. By the way, you can see I had a line drawn there a long time ago. But it's also in a pivot profit zone. And it's also basically Wednesday morning. So it's your last opportunity for a full-on counter trend, right? So what else could you add? If I was doing a video for swing traders, setting up monthly swing trades off of a double bottom, What do you think that monthly trade plan could be based on what you see here? Because I could see it back then as well. Even though it was May 30th, we had June's M2. We were sitting on June's M2. Okay? Do you think that's useful information when you're double bottoming at a reversal point? Is it possible bulls take this? And Craig says MM2 to MM4. Yeah, the target is here, guys. Okay? So I think we're down to two more swing trading meetings, and that's it until August. So if you're going to join the swing trading group in September, October, November, December time frame, to get into that group, you need to complete the swing trading course, because it's not teaching you how to create swing trades. The group isn't. That's just setting up trades as a group. But to get in the group, you have to graduate from the course. So if you're interested in doing that in September, you should do the course over the summer. But anyways, pretty neat stuff, right? And of course, if it was going to fail, what would happen? It would go up here, somewhere in here it would fail, and it would drop like a ton of bricks and make a new lower low, and whoever bought this would have what, broken even? Cool, bro. Okay. Okay, so Guy throws down the double top. Well, of course, it's plausible, right? And if it was trendy, well, wait. Frank said, do I have a mentorship or fundamental analysis? Have you completed the fundamental course at FX Bootcamp? You've done that? That'd be interesting. I haven't done that. I've only mentored people technically, but that might be an interesting experiment. I might be into that. Yeah. Holy, that's funny. I'm terribly expensive because I don't have a lot of time. So you have to bear that cost, but I might be into that. Might be an interesting challenge for me. But it wouldn't have to be, I couldn't possibly do it until September or something. I don't have the time. Money doesn't make time. So anyways, what were we saying? Oh yeah, Guy said, what about a double top? Well, if we were trending Guy, I would say absolutely no way that that's going to top. Okay? But I think we can argue at this point, all we did was print a bottom. We haven't printed a top. So I think if we were up here, that would be very interesting on the longer run. But it may not break. And often this time of year doesn't break. So here's the thing. Yeah, it could trade like a double top. It probably will, but I don't know. And if it did, you would range trade this, right? Just from the top to the bottom, to the bottom to the top, to the top to the bottom. Okay? Yeah, R1 to S1 and all that kind of stuff. The problem is that doesn't benefit me much, right? So even though I'm not supposed to, I hope I'm hoping, my strategy is hold my way higher. But you're probably right. It's probably going to come all the way down. And we do this a couple of times. And then not only could it come down for the rest of June, then it'll only go halfway up in July. And from the beginning of the July to the end of August, we're in an even tighter range from this top to this bottom. That happens a lot. I hate it. I hate it. But yeah, Guy, so you're right. That's a good observation. This could drop, and if so, I would just say, well, that's our top for the summer. That's our bottom for the summer, and off we go. HOTGOG go, right? There we go. Stuck in the mood. But I don't want that, right? So I don't know. I'm gonna bury my head like an ostrich, pretend I don't see it. Okay? That's just brutal honesty. I hope you appreciate that. Sure would like it to go up, but it's not the right time of year. So I just hate planning for consolidation. Right? And I think that shows that I'm a trend trader. So I doubt we'll get a trend this time of year. But I just can't be part of the group that creates the consolidation. Yeah, so back behind me, copper is rallying. So thanks, Guy, for that. Yeah, copper is Oscar Mike to the upside the last couple of days. Could it give it a boost? Somehow I feel like this is like it's more of a relief rally, that Europe was giving awesome data, then it was giving pathetic data, and it looked like Europe was going to unwind, right? And then we have the Italian elections, and but the data's been improving again, and I think people are like, okay, good, Europe's not going to collapse, right? And so, and oil prices are down, which can create some inflation. Well, it's funny. High oil prices create inflation, but lower oil prices will create increased productivity. So, I don't know. So you're going to have to ask yourself through your research, right? Is it a relief rally or is it increase in demand? Or is it an exogenous supply shock? Right? I had a professor when I was doing, well, I guess any economics professor says exogenous shock. They love it. So I was thinking, I took international political economy, which is fascinating, and the professor was awesome. And then I did another one on macroeconomics, and fascinating, and the professor was awesome, right? But if I was 20 again, right, I'd have a rule, like every time the professor says exogenous shock, you'd have to do a shot of tequila. And you'd, banzai! Exogenous shock! But I'm too mature for that now. So yeah, I don't want to create the consolidation key, but you're probably right. Me. All right, one more. I have to do it quick. My portfolio managers, we're moving over to the portfolio room as soon as I shut this down, right? Right? No, Emilio's here. He's here. Those guys need to be in the room. Hopefully Renai's here. All right. Hopefully you guys were running. All right. Peso, no, wrong time of the, no, wrong time. I don't want to do it. Next. Anybody? Just sorry, Mike. It's just not the right. CAD. Okay. Okay. CAD. I probably have it here, right? The reason I say that, Mike, I just want to let you know I do a flow trade on that. That trade's done. So I know you have some pivots up there you can be selling off of, but it's just I don't trade that. I generally don't trade peso technically. I trade it fundamentally. Not even fundamentally. I just trade the flow. All right, CAD, this one. Okay. What can I say about this? Okay, you're supposed to buy it below here. You're supposed to sell it high here. And everything else in between is mediocrity at best. Weekly, Michael? Nobody really cares right now in weekly. People care about wages. Yeah. We're full employment. And when we get big numbers like we've been getting, if full employment, usually what that's indicating is people are moving from out of the labor force into the labor force, which is even more wage pressure, but we're not really seeing it. Aussie dollar, okay, this will be the very last one. I've run out of time, so. All right, well, look how, well, let me change the template so it's just a more typical. That's my old template. This will be more recognizable these days. Okay? All right. So, on May 30th, right, the trade plan for bulls was this. Okay? Let me break this down. If you were a weekly bull, your buy zone was here, and your target was the red zone. Okay? If you missed that, then you're supposed, right, because basically you're supposed to set that up, before the first. But if you missed that and it opened out of position, then you're supposed to buy the retracement back into the 4-hour 21. Man, all right. The second part of that is the monthly. If you're a monthly trader, your buy zone is here, and your target is the X. Okay? You got the price action. You got everything going here. I don't know any other way to trade, so I only know that. That looks simple and straightforward. I'm not sure what other people do, which is kind of funny as a trader and a mentor. I'm not sure what other people do, but that looks really good to me. The opposite of that is, what if you were a bear? Well, you would have sold it here, and it failed, and then you were done. Oh, the counter trend trade was here. You took that, and it failed. Or it only dropped 50 or 60 pips, right? So that's that. And maybe you did this before post non-farm payroll, so it dropped from, what is that, 79? Or, sorry, I can't see that. 76 to 75.50. All right, so you would have sold it Thursday or Friday, made 50 pips. You could have sold it here, made 50 pips. So bears would have done okay. I don't think they would have got hurt. And bulls would have bought their lines. And the entries are so classic that it's very straightforward. I know where bears would have sold, and they did, as they should, because they're bears. Bulls bought where they were supposed to, because they are bulls, and they should, and they did. And And I think the other 95% didn't do any of those things. And I guess that was what I was trying to bumble my way in through when I was, like bears sold here, bulls bought here, and the other 95% didn't do either of those. Right? They did something else, and I'm like, don't know what that was. I don't know the other ways of trading, but most likely they're just mistakes, right? I mean, somebody bought in here, which is so late. I'll guarantee you, even though they're up 50 pips, they gave them back, because if they bought so late, they gave them back, right? And then someone sold here because it just dropped almost 100 pips, so they sold because they expected the world to collapse. Of course it didn't, it just went to a bull reversal. So the bulls bought it again, and so whoever waited that late to sell lost money. But if you wanted to sell it, you'd sell it up here and you would have made money. So it's just like bulls did what bulls do, bears do what bears do, and everyone else was a pig, and pigs get slaughtered. Cool. Thank you for your time. Thank you for being a client of Traders Way. Tomorrow I will be here. Hopefully you'll be here. I hope you're watching the recasts on YouTube and on Forex.Today if you missed these things. Portfolio managers, we're moving over to the portfolio manager room. I'll send an invitation just in case. And on Tuesday when we met as a group, the two portfolio managers went through their trade setups for the week. So maybe we'll have an opportunity to go back through and see how they worked, all that kind of stuff. So hopefully you'll see you guys over there. For everyone else, I will see you tomorrow. And then, of course, tomorrow after the webinar is the swing trading group. So I hope to see you guys over there as well. So peace on earth. May the pips be with you. May our profits be above average. Once again, thank you for being on my team. I really appreciate the time that you give me every single day. I like you. You're good people. See you later, guys. Cheers.